Hello, everybody, and welcome to our market update for the 18th of February, 2026. Glad to have you on board. It was nice to see a lot of you in the session this morning where we talked a lot about TradingView. We didn't get to as many symbol reviews as I would have liked, so let's go through some of those things now. That green line that you see on my chart, I put this one on for reference. I was using this during the Metastock presentation yesterday, and I kind of liked it, especially in this kind of market. If anyone can guess what that is, if you guessed 150-day simple moving average, which is part of the Weinstein stage analysis, you would be right. So this is the 150-day simple moving average. This is our 3 ATR chandelier exit. And I learned something today as I was doing a little bit of research for the scanner that we're looking at. The chandelier exit is different than just the three times the ATR level. So the chandelier exit actually takes into account highs during a series instead of just the closing prices. So if you were to just trail this with a trailing stop that uses the three times the ATR, it's going to look a little bit different than this. So just wanted to share that with the group. So this is the 150 day. I'm not basing my entire analysis on it, but I do want to see where we are in terms of the 150. As I said to you on the Monday video, this is the NASDAQ, the Qs that we're looking at here. I'm less optimistic about reaching this level here, the previous all-time highs, than before we touched this level here. And my opinion hasn't changed a whole lot. I am impressed by today's market action. But I think with news that's upcoming regarding tariffs and stuff, which I outlined in detail on the Monday session, the Monday session, yes. Uh, I'm waiting for this market to show me its hand. Either to the upside or to the downside. Now, the indices don't really look like they're in a position where I want to be long or short, or I want to open new longs and new shorts, but there are stocks within the indices that we've talked about, and we'll go through some of those in a moment. So that's the NASDAQ. Watchful waiting is the order of the day here. The last signal we had on velocity was this exit of the add-on. So there was the add-on there at around 617, and as mentioned, we got to 635, and then we got the close there. So velocity works a little different than victory. I want to be in it for this is a longer term trend following system. Once I get into a trend, which started way back in May of 2025, I'd still be in this trade. So from 488, and if I use a more conservative exit entry, you could use the 150. I'd like to use the previous pivot high that's above the ribbon for longs. So my entry would have come in right around there. That's why we had drawn in that line earlier. So for me, that is a conservative way to enter a trade. So even if I'd gotten in here at 543, this is sort of a no sweat trade if I'm following the longer term trend, which is the bottom of the ribbon. And even if I'm getting following the 150-day simple moving average, you can see we tested, we never closed below. Now, if we do close below, that will certainly get my attention because if you go back and put the 150-day simple moving average on your velocity charts, for those of you that have it, you will see more often than not, there are intersections that happen with long and short signals right around that 150 day. And I'll show you a couple of those if we have time today in this update, if we're going through some of these here. So NASDAQ, watchful waiting. S&P, I suspect, is going to be the same. It looks a little bit more positive, but you can see it's still in a bit of a channel here. We had drawn this trend line back when we hit these all-time highs. We went and tried to overcome or get above, did not. And now we're stuck in this bit of a pattern. And I'm going to draw another trend line here so you can see we're bouncing up and down. Yeah, sort of a zigzag in that channel. So I need to see a break out above 700 and or a breakdown below 677. I told you the The structured products that are out there are very strongly pinning the S&P at 7,000. So in this case, we're close to 700. It's close enough in terms of futures versus cash versus SPY. So if we do get that decision from the Supreme Court on Friday and the market reacts to it in a positive way, we could blow by that 7,000 level on SPX very quickly. And you can see we found resistance at that level now several times. But I think if we do break above it, it could be sort of a break of the levees here, and we could go up to 7,150, 7,200 in fairly short order, in my opinion. So I'm waiting to see what happens with the Supreme Court decision and some of the other news that's coming down the pipe. Looking at the Russell. Again, if you look at all these charts, and we really don't have any kind of actionable, or I don't have any kind of actionable trade idea here looking at the chart. A break above the all-time highs, yes, I'll get interested. This one, I think for me, is a distant third in terms of what I would want to do between the NASDAQ, the S&P, and the Russell. The Dow, which I don't look at as often, but I feel like I should because the Dow looks the best out of the group here. The Dow, of course, features a lot of the old economy names like Walmart, Apple may Apple may even be considered an old economy name now, not a growth story like they were. What else is on in the Dow 30 that I'm thinking of here? As some of the under, you've got Boeing in there, which is a nice industrial name. So the Dow, because the AI story seems to be losing a bit of steam, in my opinion, and I think this is going to be just like the dot-com bubble. You're going to have a few companies that stand out as winners, but right now, anything with an AI attached to its name is getting a lot of attention, but I think that's starting to fizzle, and you're eventually going to see the few winners that will uh, the withstand whatever's happening in the markets now as funding starts to dry up for some of these AI companies where investors will want to see some kind of returns and will want to see some kind of earnings. And I think a lot of the reason or some of the reason you're seeing a lot of these AI companies wanting to go public as quickly as possible and before the end of 2026 is because they want to capitalize on the euphoria in the markets right now. So a lot of parallels here when you compare this to the early dot-com boom and of course then the inevitable bust. So Dow looks promising, much more so than the S&P and the NASDAQ. So this is the one I would be looking at for new long positions. Our last long here was a re-entry back in November of last year. And just to emphasize again that this is a longer term trend following system. If we look at the same Dow on Victory between November and here. So is this the right? Let me just move this out of the way here. And you know what? I always have trouble with this Zoom thing, which you can't see, but it's in my way here. So let me put this over here. So is the entry on the same day? Yeah, the entry comes on the same day. So it's the 28th. But then you've had, so there's one, two, three, four, and a new entry today on the Dow. So if you're trading this with options or even with shares, you're making money along the way, which is really the bottom line. Whether you're making money from 482 to 490 and then back from 491 to 494, you're making money along the way. The difference here is that when you get in here at 475 and you're using the ATR as your exit, you'd still be in the trade at 497. So it all comes down to trading styles and not only trading styles, but how you're trading on that probability distribution. If you're trading this with 7 day to expiry options, you're likely going to have great gamma expansion. On this one, you're likely going to have to be trading this on a longer time frame. And you've noticed that with the trades that I put on, I like to have a little bit more time on my side because while I'm confident in direction, speed and acceleration is always a more challenging parameter to gauge. So that's a difference between the Dow here on velocity versus the Dow here on victory. Disregard this area here. They're both set up as that. I've just highlighted one versus the other. Good day for metals today. We didn't have a chance to talk a lot about it. Silver up about 5.5%, but it looks like it's stuck in a bit of a channel here too. We may eventually be able to move this up a little bit here and see if we get a breakdown or a move towards all-time highs again. When a name is in the ribbon like this, for me, it's indecision. So I'm just waiting for something to happen here before I do anything with my positions. I'm still active on in PSLV and I'm still active in SLV, and those are protected positions. So I do have a protected put on PSLV and I have a collar on SLV, and that collar was put into effect when SLV was trading at around 72 or so. So the short call on that collar is certainly starting to bleed in my favor. And that put a little bit of expansion. This is January 2027 expiry. So uh, I'll make a decision on this if we get a break below the ribbon here or if we start moving a little bit further up. The other position that I currently have is XGD, which is the gold miners. And looky here, we are about to test that support area at the Chandelier exit. So if we get above here, then some of the caller positions that I have, I'll need to make an adjustment on because they'll start to get closer to being in the money. And I'll need to likely roll those options out a little further. So I have some for September and some for December in XGD. We look at gold futures in general. I really like this pattern. I really like this support at the ATR. We move up a little bit, come back down, and I don't mind the breather that we're taking here. And if I was to open a new position, my bias certainly would be to the upside here. I find it interesting that as the markets were selling off, in the past, people have run to Bitcoin for some kind of inflation hedge. But in this case, what's happened over the last year is it's become very clear to me that people are not running to Bitcoin. People are actually running to gold and silver. Whether that continues, that's a good question. But right now, if I compare the chart of gold to the chart of Bitcoin, right now the situation is very clear that that gold is certainly getting much more of a favorable view than Bitcoin is. However, we're looking at it what it currently is. What will it do in the future? Well, right now, unless it has a significant move to the upside, I would still be favoring gold in terms of where I want to go with either a protective strategy or on the speculation side. Bitcoin seems to be stuck in a bit of a channel here. Once we hit those $60,000 lows approximately, we've had a tough time getting above that 73,000 level. So that's the level that I'm watching here on Bitcoin, 73,000 and change. And on my social media feed, I suppose it's because I'm searching for this stuff and I'm interested in what other what experts are how experts are opining on Bitcoin. You get you're getting everything. You're getting people that are saying that Bitcoin is going to go to 1.5 million, and you're getting people that are saying it's an asset class that is outdated and could be obsolete, especially with quantum computing, and that it is going to zero. So I'm not on either side. I just want to see where the money is coming in, and I want to make a decision based on what I think the big money will be doing. As gold, silver, we've looked at Bitcoin, we've looked at as well. I looked at TLT on Monday and slight move up since that, or slight move down, I'm sorry, since the Monday bar. Uh, sorry, since the Friday bar, I did the update on the Monday when the market was closed. And I do like this for a long, and because of the way this is set up. So once I get the main long, unless it's breaking a previous pivot high, and let's say we count this as a previous pivot high, this would be a long for me. Although I'm a little leery right now of going long on the 20-year bond, but I want to see if we can find a bit of support here. And then I do like the fact that the 150-day is setting up. We haven't been above the 150-day in, I don't know, about a month or so. And now we've got this confluence of 150-day plus the ribbon plus the long signal on velocity. This gives me a little bit more confidence. And the options on this are cheap and cheerful, but it's a slow mover. So I'll have another look at this towards the end of the week. I did do a full scan of the S&P 500, so it's 500 tickers. Took me about a minute and a half. So the plan for this is to send out a version that you can run on your computer locally, because if we put it up in the cloud and everyone starts scanning with it, things can slow down. But I think I've got a way that I can send this to you so that it can run on your local machine and use data that won't cost you anything. So working on it, stay tuned for that. So we've got four longs to look at today: AIG, NCLH, OTIS, and SYK. So let's go over and look at each of those using the velocity template. So start with NCLH, Norwegian Cruise Lines here. Is this a long that we want to consider? Uh, so it hasn't popped up on the chart just yet. So what happens with the chart is when the new bar opens tomorrow, you will see a long here. So the scanner actually is a little bit ahead of the uh, the chart itself. So in this case, I'm less interested in this one. It's just a messy, messy chart. So for me, this is an easy pass. Next, we have, going to our list here, Otis. So these are all new long signals. Same thing here. You will see a long on this when the market opens tomorrow. This one could be a little bit interesting. I think a break above this previous high here, I might get interested as long as the option pricing is decent. So this is something I will follow up on during the next 2 days. We have SYK and AIG. AIG, from what I recall, is a bit of a messy chart. And yeah, very interesting fan pattern here. You don't see that often. But this one, this one doesn't look too bad. If I can get the risk down here, depending on the way the options are structured, earnings are behind us. Not really. You don't have a lot of people really interested in AIG. Volume very, very low here, or there's a very balanced number of buyers and sellers here. This is this is the trade, and going back, this is the trade I would have wanted. Look at that very significant cumulative volume delta, and you get into that trade at 80, quickly runs up to about 87, which for AIG is a pretty significant number. We may have that same pattern here again. So this one I may just wait for a reason from the volume perspective to look for a proper entry. And I think we had SYK that was also on the list. So SYK, again, you will see it was SYK, right? Let me just look through. Yes, SYK. So you'll see the long entry tomorrow. And this one's a little bit of a pricier stock. A break above this 377 level, I may get a little bit more interested, I'm sorry. So not really a whole lot for me to do with the four new long signals. On the Friday session, we can run a live scan and go through those signals at that time. After hours, there was some excitement. I'd mentioned I do like NTR. NTR, I'd be very surprised if this is a big trade. You notice the difference between something like this chart here, and SYK that we just saw. Which of these charts would you want to trade? So for me, the answer is pretty easy. I would want to trade something like NTR. So in this case, after hours not really doing a whole lot. I have high hopes for this one. This is a longer term secular play for me. So keeping my current positions here. I sat through earnings. I was willing to take a bit of a hit if the earnings didn't go in my favor. So here we are, not really a whole lot happening. But the more exciting one, and I mentioned this to you, and oh, wow, this was trading it down at 280. It's come up a little bit here. Let's see where this opens tomorrow, but I think people might finally be seeing cracks in the Carvana story, along with their affiliation with Drive Time, et cetera. The government is involved in reviewing some of those relationships. So I do like the short. Our short did flash here on the 13th of Feb, and I've seen this more often than not. The first earnings report after a longer short entry tends to go in the direction of that entry. So here's a short, and the first earnings report here, it's a follow through on that short. So that is it for today. I think we've looked at everything. We will be back on Friday to wrap up the week with all of you at 1 p.m. Eastern for our next market chat. Until then, we always wish you profitable trading, the very, very best of health. We'll see you then.